Okay.
Should I start?
Yeah, good morning, Dave.
Hi, Mauricio. I want to welcome everyone to our coverage of the GDP today. I'm joined with Mauricio and Valeria Bednarik. She's leading our formation into the GDP. What are the markets looking for, Val?
Hi, Dale. Hi, Mauri, and everyone in here. It's great to be with you to cover live this GDP event. I don't know. I believe that the market has got a bit too enthusiastic about the greenback these days, right? Because we have seen the dollar regaining all ground lost over the beginning of the week and even extended its rally across the board. It's true we are waiting for a really strong reading, and this is the advanced reading, meaning it's the first revision of GDP of the second quarter, right? It's the first number they will publish about that particular period, and we are waiting for a 3.2% or 3.1%, yeah, 3.2, right? Yes, growth in the second quarter. And if we compare that to the final reading of the previous one, which resulted at 2.2 or something like that, and in fact it was first suspected to be negative, there's a good reason to be optimistic, right? But anyway, at the same time,
I don't think that we can ignore the panic that we had in equities globally, Val. So really, I think this GDP is probably more important than it's been in years, because
I agree with you.
The market's trying to game the Fed. The VIX went to 50. You were negative the market. It was a great call, Val. And I don't believe this correction is over. I think we're just getting a reflex rally in both the dollar and the S&Ps. They're trading lockstep. The only difference is magnitude. So
yeah.
Do you think this is a very important GDP with what's been happening in global markets?
Yeah, I do believe because all this recent turmoil has diminished dramatically chances for September rate hike, right? And all the previous dollar strength was based on the suspect that the US will start lifting off in this upcoming meeting in around 20 days, right? So I believe that now the market is reconsidering that possibility. And we need a really, really strong GDP reading today, and mostly a strong payroll next Friday, right? I do believe it's next Friday, to restore confidence in the rate hike. You know what I mean? But when it comes to stocks, I do agree with you that the recoverers we have witnesses have been pretty shallow to Monday slump, right? Compared to Monday slump, and we should not forget that over the past week we have lost huge also, and I do believe that the risk remains towards downside in stocks, because if you take a look at the bigger time frames, you will see that the corrective movements, the latest advances have been just corrective movements. That's what I'm trying to say. It seemed like barely corrective. I have nothing tell me that a bottom has been confirmed, and I keep watching in here that big figure withdrawal. Remember, Dave? And we have got close to it on Monday in the wild.
Yeah.
But still,
Noster Pinkert. Yeah. So where's that line coming in now, Val? Because I actually have a scenario where I think the Dow could 13.6 or so.
Yeah, 14 for the upcoming 3 weeks.
Okay, yeah, that we could rally back to about 16.8, 17,000. The first break was 3,000 points, and the next break could be 48. So if we got to 17.8, it actually comes in around 1,200. But I do think that line is going to be visited. When we drew that line, there was a truck with guys in white suits coming to take me away. Yeah, and now it looks like it could become reality, and you'll have like a megaphone formation.
Yeah, we have this 100 simple moving average, pretty much around 17, right? So that's sort of a line in the sun. I
think that, if you're nervous about stocks, and look, we all trade FX, Val, but there are many people that come to FXStreet that have 401ks and retirement accounts, and they've been able to just, ride the wave. And this really surprised a lot of people, this decline. There were people looking for 2,200. So if you feel a little bit uncomfortable, I would use this strength to raise some cash. We get a rally back to 17 grand in the Dow, and
The thing is
maybe look to reestablish positions in the fall.
the thing is that if we take a look at the bigger time frame, right? The stocks have been running for years, right? And take a look where the 38% of the retracement is, the 38.2 retracement is 13,800, meaning in a couple of weeks will converge with the trend line. So it's just a new corrective movement, what we are seeing. It's not a real reason to panic, although I do believe the market will actually panic if we fall down to that level, and we will probably continue down.
Yeah, where was that high in 2007 that you were just showing that chart on?
2007?
No, I think the one after you were showing the peak. There you go. Okay, the high in the middle of the chart to the left. Yeah, where is that?
14,300, 14. Okay, let's 270. Yeah.
Okay, thank you.
That's the main target.
Yeah.
Okay.
So I guess the question is, if we're going down there, Bill, I have a hard time believing it's going to happen with a strong dollar, but I guess it's possible. The first wave down in the market happened with a weak dollar. So when we were talking about the Dixie, even up around that 98 level, I thought we could go back towards the base, and we actually violated it on the Dixie. And to me, just like the Dow, it looks like it's just a bounce, and that the lows in the dollar or the highs in the euro might have another go. They might have another go at the lows in the Dixie, another go at the highs in the euro.
What is now something that we should take a look at? And this is the Japanese yen, dollar Japanese yen, and we are struggling with the 50% retracement of the last 2 weeks line, right? The dollar may have recovered against its European rivals, but here things does not look good. This looks pretty bearish still for me, particularly in bigger time frames. We are below the 100.
Concur. Scroll back on the dailies and you'll see why it stopped at 116.
Yeah, we have
Look
made
at that.
in there.
Okay, so that's a pretty. I think we're going to break down, Bill.
Yeah, well, it will depend, mostly it will depend on today's data, right? Because if the figures are below expected, the pair may resume its decline, and in the short term, I will be looking for a test of 19, 20, 30, this area, right? But if we close the week below this 38.2, there's a good chance to retest the lows, as you said, yeah.
I'm thinking we could go 61.8 first. I actually drew my fibs a little different from. So it came in around 122 as the 61.8 back for me. Where is it for you? 21.30.
Yeah.
Okay.
And around 21, I have the daily 200 simple moving average. So I believe that this 30 pips will be a strong resistance level, and we need to clear that to deny the possibility of further declines.
Also look at the decline and look at where the RSI was before the recovery, and that's the day the market recovered from being 1,000 down within 5 minutes. So those are what I call confirmed lows, and markets rarely bottom when a low and momentum indicators are confirming each other. So it implies at least another visit back down there that may or may not confirm. So I'm licking my chops for yen shorts. Just a matter of if and when I get them off. I'm going to try and be patient, because if I think the Dow could rally back to 16.8, 17,000, in that environment, the yen risk on could have a little bit more upside, don't you think?
Yeah, exactly. But still, that's the 21 level. That is the line in the sand for me, and I would like to see it above that level to talk about more bullish potential here. But yeah, if stocks continue rallying, then the downside will also be denied in here.
Little bounce happening in crude here. I don't think it's the bottom, but I think it is a bottom. And with that, I was thinking we could get back to 44. Where's your moving average coming in?
The
42.
yeah, 42.30. We
Okay.
have former lows in there. The fact is
Yeah.
that yesterday's stockpiles reports in the U.S. were pretty negative for first, and the price maintained a bearish tone. I guess part of what we are seeing right now, this bounce, is probably uh, has been probably triggered by the stockpiles increasing, but still, I do believe that the bounce has been pretty shy, you know. I do believe that we are
Yeah.
still far from confirming, as you say, this is the bottom,
Yeah.
right?
Just
Yeah,
a bottom.
we
Yeah.
talked about this previously. It
Yeah,
could,
you said it would hold a little bit under 40
yeah, it could,
in an
but
interview we did a week or so ago, which is what's happening so far.
exactly.
And
But
if
I
if you
like
look,
to see it about 42.30, 42.50, and gain
yeah,
some momentum to talk about a bottom.
yeah.
That's
Pull up the weekly.
there we are.
Okay, and scroll. Can you scroll back a
Can't
little bit?
scroll back
Oh,
because
you
this
can't. Okay.
report, so it has only the latest
Yeah,
switch.
it doesn't have enough
I, I
data.
think I
It
think
has
I have that chart. Give me a second.
what? Ah, okay, you have the chart. Anyway, in the meantime, what do you think about what happened with pound yesterday, Dale? That
Oh,
slump, almost
wow.
250 pips, 250, yeah, pips slide out of bloom with no data. I do believe that it was partially due to fears of a delay in a rate hike also reaching the UK shore, you know. I do believe that what all the turmoil we have seen in the past weeks in China is finally
Better
waiting.
dig in its heels here, right in here.
What?
It better dig in its heels right here, or a washout. I just still think it looks incomplete to me, this pattern, but still think that there's a chance for 160. I know would probably down first before that happens, but I haven't really known what to do with the pound for a few weeks now.
Yeah, well, it has been almost 2 months that the pair has been stuck within a pretty clear range, right? And we broke to the top and we say,
Yeah.
okay, there we go, 160, and all of a sudden we have this reversal and we are pressuring the bottom of the, and moreover, I do
That's a
believe
pretty bearish candle.
it's pretty bearish, the outlook in here. Anyway, short term, I do believe that if we break below today's low, we can extend down to 53.70 today at least, with little in the way. Yeah, of course, if the upcoming data is positive. Anyway, 1 minute to go, guys. Remember, we have a bit of a delay in here, so you will be probably seeing the outcome of GDP. uh, Maybe a minute before we can comment it, but that's the normal delay we have, okay? Sorry for that, but the best
There
we
we
can.
go.
Anyway, yeah, here we go. 3.2, 3.2. That's what we're all waiting for. Okay, 3.7, okay?
3.7.
Yeah, really, really.
Very much better than expected.
Yeah, and initial jobless claims also
Better
came
than
out better
expected.
than expected, 2.71, 271, sorry, against 274 expected. And a personal consumption, okay, personal consumption expenditures in line with expectations. But GDP came out better than expected, and we are seeing a pretty shy reaction in the market, although the greenback is advancing.
Yeah, first reaction is greenback.
Yeah, we have a really poor reaction in stocks. I would like to see some upward momentum in here. Market has been a bit shy. Anyway, if the dollar definition manages to take this high, today's high, it can extend up to the 21 level, right? The 200 simple moving average in the daily chart. And it
Where's that
will,
purple line that was on the end up there? That was 21?
this one,
No, the one above it.
It is the 200 simple moving average.
Yeah, where's that?
122.05.
Okay, that's my area. Well, I don't own that area. It's an area of interest.
Yeah.
It's mine.
Yeah, anyway, I understand you.
How possessive of me, huh, guys?
The dollar index is going up, which is positive in the week.
If you have a chart.
So we had $100 rally in gold, Val, and we pulled back about halfway. You think we might dig in, put in a higher low, or?
Take a look where we saw around the 100 simple moving average in the daily, and now we are pressuring this one.
Right.
And I
New
don't
low
know.
or higher low, I guess, is the question here.
What? If we can
are we going to hold that 1070 level on this pullback and put in a higher low? We're about halfway back now. I think 61.8 back is maybe of the rally, the $100 rally, probably around 1100.
This 1109, 1110 price zone is like a line in the sand, because the highest the commodity reached after the slump, right? And if you take a look at the daily, if you take a look at intraday charts, it will be even more clear. The price has held many times around it, and once it broke above it, it has been the support level, right?
Yeah.
This is the level I'm watching, okay? And if we take it, I would expect, I'm not sure if a retest of 70, but back to 1080, probably. The metal has been around 1085 or so. Okay, it has spent days, full days, hovering around that area, back and forth, back and forth. Seems like a fragile equilibrium point, but there it is, right? So if we lost 1110, then that's the level, the probable bearish target for me. I'm still not confident that the gold is ready to win, because on the slump we have seen these days, the metal has gained little and reversed it pretty fast, right?
Yeah.
Faster than anything else. So I don't believe that the risk in here is still towards the downside. Not big. As in oil, I do believe that we are near production cost, and of course further declines seem less heavy. You know what I'm trying to say? Price may consolidate near the lows, lost a couple of bucks, but I'm not expecting a $50 decline in gold, or a $20 decline in oil. You know what I mean? Maybe 5, crude to 35, gold to 1050, but I'm not seeing it breaking lower. Anyway, pretty limited reaction in the market. Guess we have priced in most of the positive GDP reading before the news, right?
Yeah, a pretty good divergence in the euro. This low is way above the low from a few days ago on the hourly. I think that's what we're showing. Yeah.
Yeah, we are there. I don't know. I do believe that we need to take 50 to. We tested 47, 48 right now, but if we go back below that level, we can approach to 12 in a year. The dollar is.
I think it's too late to short it, though. Just my view.
Yeah, I do agree with you. The market has priced most of it. Take a look at the Dow. Not 1 point since the release. 2. With the S&P. I have lost my S&P chart.
They're firm.
Yeah, here.
And maybe we get all the way back up to your blue line on that chart you just had there.
This one?
Previously, yeah. Where's that?
A 100 simple moving average in the
2030?
2040, yeah.
Yeah.
I have this huge
big area. That was the breakdown.
Yeah, these two are huge breakdowns we had.
Well, it looks like it's trying to fill a gap here. Maybe that was a gap from Monday.
Yeah, from the beginning of the week.
So we've got that. That could be an interesting area. Nice look.
Yeah, but as almost every index, European and American index mostly, the daily chart is telling me that they are in an upward corrective movement, but still far from confirming a full recovery, right? Because if you take a look at the indicators, barely bouncing from extreme levels, and we are not yet at Friday's close.
How about this? We're going to develop a right shoulder if you go back to that chart. See the left shoulder in September of 2014. And the neckline, just draw a line against the October 2014 low and the low that we had Monday. And then we build a right shoulder that would be, if it had symmetry, it could rally back towards that right shoulder. It came in, it looks like around 2030, 2040.
The weekly chart seems, yeah. It's like a double bottom, I have just noticed.
Yeah, so that's what a lot of people are thinking. And it is for now. I still think we're going to take it out. Markets don't bottom in a day like that. There's so much technical damage to the market.
Yeah, it takes a couple of days to raise it. Just the intraday indicators becoming more real. All that noise distorts everything. Anyway, the pound continues its way down, and it has set a fresh daily low. So I do see it breaking through 54. We need a little bit of momentum in stocks. But I guess the investors are being extremely cautious after yesterday. What, 600 points advance, right, in the Dow? I guess the market is a bit nervous about buying more right now. I'm pretty surprised the limited market reaction we are having. Are you there, guys? Yeah.
Yes, we're going to rally. The dollar's going to rally into the supermoon. The moon is the closest to Earth, I believe, this weekend of the whole year. So keep an eye on the moon this weekend and take a romantic walk with someone you love. And be thinking about market reversals going into next week.
Okay.
Moon River. Remember that one?
No.
Andy Williams.
Anyway, here we are. The Aussie is giving up ground. I don't know. I don't see it breaking through 70 in the upcoming days, weeks. I don't see how the Reserve Bank of Australia not cutting rates could be a reason to be bullish in Australian dollar. A bit of carry trade maybe, but it's not enough.
So you think that they're going? You think they're going to go in September, Val?
We are what?
You think they're going to raise rates or stand aside in
I don't
September?
know. But the only thing that I'm really sure is that September Fed meeting will be whoa, because whatever they do, if they rise, if they don't, it will be a shock to the market.
What's the date? What's the date of that Fed meeting?
17, 18, around that date. I'm not really sure.
Let me check.
Yeah.
After the Shemitah.
What's the Shemitah?
Shemitah is a lot of people are following this. It's a 7-year cycle based upon debt in the Hebrew calendar.
Okay.
And some guy has done a study on it, and so you go back every 7 years, there was an event. So, you know, 7 years before that, you had 2008. You know what happened then?
Yeah.
And then 2001. And
Yeah.
here we are again. So,
Well,
Okay.
next Fed meeting is September 17.
Yeah, I was right then.
yeah, right near the equinox, too. So,
It
Yeah.
will be fun, no doubts. But yeah, I do believe that they will raise. I still believe they will.
I don't think so.
I
But
do.
this is not new for you, Valeria.
What?
That I don't think so that they will rise rates.
Yeah.
But I know you already know that. I think that.
Yeah, yeah. I don't know. Jalen says that they will try to do at least 2 rate hikes this year, right? Of around 25. So they have to rise in September. So they can rise another 25 in December. I believe that that's the plan. And I don't believe that it will stick to them. Okay. Unless we have more turmoil or we have a really lousy payroll next week.
yeah,
No.
that's going to be their cover, Vale. They need
Yeah.
a strong number on payroll to go ahead. I think that'll seal it. They need some cover with the turmoil in global markets,
Yeah,
and
so
it's more about credibility now
yeah, yeah,
than economic conditions.
yeah, I do believe so. So I still believe. I don't know. We will see. It's
Well,
not.
the market sold off on the dovish Fed minutes. That was it. Okay, we rallied on the Fed minutes and then sold off negatively after that, and that was a high of a directional kind of mini crash, flash crash in the market. So I think the market wants them to raise rates to show that they're confident in the U.S. so-called recovery.
Yeah, exactly. Americans tend to be really proud of themselves, so I guess that will weigh more than the economic situation.
Well, I'm
Uh,
proud of the Americans that stepped up on a train in France.
yeah,
I'm not surprised, although there were also Europeans, a guy from Britain and I think a Frenchman. So it was
yeah,
a NATO effort to take that guy down.
yeah. I read about it.
There is two questions now. There is something. There is Hans from the chat asking, what do you think about the euro? What do you think? This is possible to go as far as 1.18 or maybe 1.20 at the pair not having topped out yet. So what do you think, Valeria?
Uh, I do believe that talking about 118 or 120 right now is a bit too much, And well, it's that those 800, 1,000 pips will be purely related to whatever the Fed decides to do in September. It's impossible that in a normal market we can move that amount of pips and before the Fed, right? I believe that at this point, pair looks slightly bearish, and we will probably keep breaking lower or today and tomorrow. So I will not see the upside. However, there's a good chance the pair may revert its course in the upcoming weeks on negative US data and a delay in the rate hike in September. That will be a key. But honestly, I don't see how the euro can be at 120 when the ECB is pumping money into the market and the US is about to tighten its rates, right? What we saw earlier this week was chaos out of the blue, and this kind of 700 pips rally in 3 days happened once in 5 years, right? Not something we can see at this point. The pair seems a bit exhausted, a bit exhausted towards the downside, a bit overextended. So maybe we can pull back some, but I would like to see it above 1360 to talk about buying, right? Or pullbacks up to that level for me will be most likely selling opportunities rather
Where's
than
the red line come in on that previous
Yeah,
chart?
that was my
1440 or so.
And that was the key area that we broke through and cleaned out stops. Remember, for weeks I've been saying
March high, we have, yeah, there. No, sorry.
Yeah, that's a pretty ugly week. But you see how they took out all the stops over 114, which was why I was constructive euro. I said they had to take the parity bears out before it might happen, and they're
Yeah,
gone.
yeah. But this kind of rallies are not normal, not something we are going to witness daily basis. So we are in low lows. And I do believe that if we have a bit of more of an upward momentum in stocks, the dollar may continue advancing. Take a look at all the board; it's higher. The weaker today, however, seems to be pound. Unstoppable decline in here. Can hold. Yeah. Was there another question?
Yeah, yeah. There is question from Ismael in the chat. Is, do you think with this GDP report, if the oil has a space to move forward?
Good question. Not really. Not really at this point because the market remains extremely oversupplied. And the only thing that can take oil really higher is that we see, I don't know, the OPEC deciding to downgrade their production or something like that, really higher, right? Not talking about intraday corrections. Furthermore, that is showing that the US keep drilling more weekly basis. So I don't think this GDP reading it's enough. I don't know. We have GDP readings in the UK tomorrow, so maybe we have a stronger economic development in the rest of the world, maybe. But keep in mind that the major importers of energy are China, Japan, the Asian countries, right? And they are nothing but good economically talking. So, but it's a good question. It is. And I'm sharing just my personal view, right? But crude can come back higher if China economy recovers, not only US one.
I
Okay,
see.
dollar capitalization
Well,
is breaking higher. It's taking the heights, so the pound dollar the lows.
well, there is another question. There is from M from the chat. There is impressive numbers for the GDP, and there is most likely another good print from the Northern Peru next week. The question that we were talking about before, if you think that it will be enough to get the first hike in September.
Well, I say I do, and Mauricio and Dale said no. So there you have.
Dale, yes or no?
Yeah, I think that the jobs number is going to be what they really need to confirm the GDP. If they get a strong, and the market right now thinks so, right? They're bidding up the dollar. So I think that there's potential for them to go ahead and do it in September. This helps, and the NFP will really be icing on the cake if we get, say, over 220 or so.
We have some doves from the Fed talking not as dovish as usual. So I don't know. The Fed is more scared, as you said, they're more scared about what may happen in stocks when they take the rate hike than about the economic development, I believe, at this point. They're more scared of that. Just thinking out loud. Okay. Pound is about to break below 54 and reach the 53.70 level. The Dow is slowly greening higher, but still has little upward potential. I don't know, maybe when Wall Street opens in about 40 minutes, we have a more clearer picture. So surprised the movements are shallow compared to other advanced GDP readings. Okay, here we are. In turn, Twitter is full of reports saying that Fed rate hike probabilities have risen after GDP figures. What we were saying. Okay. So maybe the
Eric,
payrolls.
yeah, Eric from the chat is asking about the 1.05 in the euro dollar, and if it's possibility to go down there.
I do believe that if we take back 110 next week, and if the payroll is really strong and we keep on pushing lower, there's a good chance we go to retest the euro lows. But again, those 800, 1,000 pips rally are not likely now ahead, 20 days before the September Fed meeting, right? And it will all depend on that and where the price is before it. But as I explained earlier, one economy is tightening its economic policy, and the other one is floating the market, the local market with money. So that imbalance should favor the greenback. Of course, if the Fed sets no rate hike, that will be a big mess and change my whole point of view.
And we also have today the pending home sales in 1 hour.
What, sorry?
That we will have pending home sales in 1 hour.
We have housing data in a while, yeah. Housing data was tepid lately, not bad, but not good enough. Anyway, the housing sector has posed a strong recovery because we should keep in mind that all the American crisis we have back in 2007 came from the housing sector, right? So we have been improving, and it seems that we have reached a top in there. Figures are close, but not growing at the time being, not growing enough with the economic growth. But still, I do believe that a positive number in there should help the greenback today.
So
What
the
do you
market
think?
message,
Oh, sorry.
the market message for me, Bill, if you show the charts you just had here, is that the dollar pairs, the risk on pairs, no, the chart before that showed the Swiss, the yen, just your block there.
Yeah, I have it
Okay,
on.
so there you go. Swiss making new highs, pound making new highs. A week or so ago, Canada would be at new highs too. Okay, now all Canada's doing is bouncing off one of Val's moving averages, maybe back to the red one. So this is what I ask myself. If Canada cannot rally to new highs with US dollar yen, US dollar Swiss, then what's going to happen if the dollar loses some of its bid? If it can't perform while the dollar's bid is very stiff, what would happen if the dollar came off? So to me, that's a change in leadership of relative strength, and Canada looks vulnerable to me. So sell rallies in Canada is my view. I think we topped. I talked about it on the pre-LAR market roundup. We had all kinds of divergences up there. But don't you agree, Val? A week or so ago, if U.S. dollar yen and Swiss were making new highs, that Canada would be making new highs with it, leading it, in fact.
Yeah.
Okay, so that's a market tell to me. That's why I watch a lot of different things, is to say, well, is something performing the way it was, or is there a message? Is it beginning? Is there a shift? And to me, that's a definite shift, that there's more strength in U.S. dollar yen, U.S. dollar Swiss than there is in USD CAD.
Yeah, well, CAD it's a bit heavy due to crude oil prices, and the latest recovery is given a lift to the Canadian dollar. But as we were discussing earlier, unless oil really retakes the upside beyond 42, 45, I don't see much of Canadian dollar strength, meaning not bearish for the dollar CAD. It's amazing that we have spent years in the 110 region.
Look at that 3 drive to a top formation on the daily.
1, 2,
1, there
yeah.
you go.
1, 2, and 3. Yeah, I saw
Take
it.
a picture.
But
No,
do
I'm
you
not
think?
saying that Canada can't go to 140, but it certainly could go to 130 first.
Yeah.
And I'm not saying crude is not going to trade in the mid 30s, and I know people talking, 20 handles in the crude. But nothing goes straight down or straight up. And
Yeah.
I just think that we have a short squeeze going on in crude that could take it to 44 to 46. And with that happening, I think they're going to shake out USD CAD bulls.
Yeah.
And yesterday was a theory, but I have more confidence in that call because of what's happening right now. Strong GDP. Canada should be trading 133 right now.
Yeah, we didn't have any data in Canada, right? No. Well, nothing that can mess bad with the GDP. So, we have inflation Japan later on today. The market cares much.
Okay, guys, just to finish this live coverage, I will ask you about a summary and recap on what happened and what will happen in the next few days, if you want, Valeria.
Okay, what happened today is that the second quarter advanced GDP rating in the US came much better than expected, 3.2%. Really a surprise, a good surprise for the dollar. But the greenback advance, it's been a bit shallow. I do believe that because market is still a bit scared about what we have witnessed earlier this week and what's going on with China and the fact that the pair is overextended, the dollar is overextended today after yesterday's rally. But for the most, I do believe that the market will be waiting for payrolls and the rate hike to define trends, longer term trends. I do believe that we will have them in 20 days, not yet. Anyway, and for the short term, I do believe that we may see further dollar gains if stocks begin to gain a bit more of upward momentum after the opening. The dollar definition for me, it's still risking a decline, okay, because it's having a hard time to advance. And the 21 level for me is the line in the sand. I still believe that the pound is the weakest today and that the euro can test 112. Okay? And that's pretty much it. Let's see what happens with Wall Street opening.
Thank you, Val.
You're welcome.
Is that it, Mauricio?
Yeah, Mauricio, I don't know, he's dead. Yes. Go with your wrap up, Dale.
Sorry,
Okay.
yeah, Dale, your
Okay,
approach.
so my takeaway from this is I believe we're having a reflex corrective rally in both the dollar and the S&Ps. I think you could key off the Dow 16.8 to 17,000 area. That's where the dollar rally may terminate. See where the euro's at there. It could be a buying opportunity when the market reaches that point. Also, Canada showing its colors to me today with dollar strength. So I'll be interested to see where Canada's at when the dollar gets to, say, about the 96 level in the Dixie. And you could key everything off this rally in the Dow and the S&Ps, which I still think is a B wave, a correction of the recent crash. And I think there's another wave down coming in both the S&Ps and dollar. Not from right here. And we talked about the yen sell zone. For me, it's up around that 121.80 is 61.8 back for me. So what are we, another 100 points from there?
Yeah, a bit more.
Okay, 140 pips.
Yeah.
So we could be there next week.
Okay.
Those are my views.
Okay.
Okay, thank you, Dale. So what we'll do right now is just finish the live coverage, and then we will turn into the live analysis room. But we will continue in the same hangout, in the same video. So thank you, Valeria, for joining us today. It's your time now, Dale.
Okay. Thank you, guys.
Okay.
Bye-bye. It has been great.
Val, you have an interview with me and Laura.
Yeah, in about an hour.
So it's a double header for you. So let's see if what you said is right in an hour and 15 minutes.
Oh, I'm scared. Okay.
I know you're. I want to thank everyone for choosing FXstreet for their live GDP coverage. I hope that some of our insights have added value to your trading experience at FXStreet. And we're going to go live and learn now.
Bye-bye. See you later.
See you
Bye-bye.
guys.
See you guys. Okay, Dale.
Yeah.
So just to let me show you how. Do you remember how to share the screen in the green button, so you will be able to show your chat, anything else that you want. Dale. Okay, guys. See you in a while. Bye-bye.